Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Doing good, doing good. We are financial advisors here at Jazz Wealth. And by the way, thank you so much for those of you that have realized we're open, of course, and have come along and joined us there. Really appreciate it. We're really trying to shoot to be the financial advisor that everybody could have, just doesn't know that they could have it. So we'll work with anybody. Everybody's in a different financial situation, and we're finding that out with all the new people that have joined. Boy, everybody's got different goals than they had just a year ago when everybody said, well, I'm going to retire early and just go travel in the mountains and stuff. Boy, lives have changed, huh? Lives have changed. Our goals have changed. And so if you're looking for someone to help you out with that, with really genuinely no strings attached and no games to play there, I hope you'll check us out at jazzwealth.com. We use this class here today, the Closing Beat, to cover the stock market because we're one of the only advisors that actually watches the market. We manage our own funds, so we kind of need to be here and not playing golf and stuff. And I enjoy it. And so it's one of our fun things to do. If you look off to the right-hand side of your page, you're going to see the stock market performance today. Green. Got a little green on the screen today. Not too bad there. By the way, our Wine and Wealth tomorrow topic is in development, but we're likely going to do, and this is news to Cody, we're likely going to do it both for clients and then make it public as well. It's accounted for already. Well, how about that? They're one step ahead of me there. So tomorrow night, if you want to come hang out, it'll also be here on YouTube, right? 8 o'clock. And then clients, to go find us in the dojo if you'd like. But we'll have a little fun because Cody is going out of town. He is, where are you going, Cody?
Going to Boston, Massachusetts.
Oh, I actually didn't remember that part.
Oh, really? Oh.
I thought it was a golf trip.
In Boston.
In Boston.
Yeah.
Well, la-di-da. All right.
Fancy.
Wow. Okay. Well, so Cody
you just said we don't golf, too. That's the tough part. We don't golf.
Well, he golfs. Cody golfs. He's got time to play golf. I wish you well. Yeah, that'd be a good time. Okay. Anyways, that's news to me. So it'll just be me, right? Come hang out with me tomorrow, right? We'll cover some cool stuff, maybe some data, and try to teach you something new. Love to teach in the Wine and Wealth classes, and if you like a little bit of something to drink with it, that'll work too. We'll join you there. Anyways, our FinTips videos are free. They're on YouTube every day. Today, Eric was talking about some 401ks. Our sort of master planner around here, working with you on that. So be sure to check that out. It's totally free. And then last night I did a post on the Fed. It was kind of like telegraphed in the Wall Street Journal that they knew what the Fed was going to do ahead of time. And so I pointed that out. I actually was showing you or talking about the article and how that came to be. So if you want to go back and look, that turned out to be spot on. So good job, Wall Street Journal, for, I guess, giving away the secret a day early there. Anyways, the news is that the Fed raised rates 0.75%. That is officially, that's the largest rate hike they've done that I can remember, 90s. You got to go back to the 92, 94, something like that, to find a rate hike of that much. Half-point rate hikes, less common, but still there. Usually we see a quarter-point rate hike, rate cut, whatever adjustment they make, it tends to be in a quarter of a point there. The July odds, by the way, so the next Fed meeting will be in July, and the current odds are stacked at 0.75% for July as well. And Jerome Powell basically said, that we're going to keep this thing going with the 0.75. So if you want to know how all that works, last night's video on our YouTube channel, I covered all of that there. Now, the 0.75 today is great. As long as you want rates to go higher, 0.75 in July puts them to about neutral as they had it. But today they chose to raise what they consider neutral by just a little bit there, which is probably good news because the White House has taken the position of, we're going to rely on the Fed to conquer inflation. We're not going to do anything about it. That's sad, but that's where we stand there. And those were their actual comments there. The Energy Secretary, actually, her exact words were, we should probably focus on COVID instead. And her words, I'm not making this up. I don't know if she's Republican, Democrat. I presume she's a Democrat. But she's like, we probably ought to look at COVID first, make sure we get to herd immunity before we start worrying about gas prices and stuff. And it was like, wow, you're just giving the green light to all the bulls to just go dive in and have a great time there. But nonetheless, I don't need to tell you more about that. 0.75% is what we have done there. I found it interesting also that the Fed chairman during his press conference, he was talking to home buyers. All the home buyers out there, he's basically saying, he said, you might want to wait until this resets. So that was his advice. He like gave advice. One of the first times you've ever seen something like that, where he was saying, look, interest rates for homes are up here. I get it. They need to reset. Home prices are up here. I get it. They need to reset. So he was basically saying that will be collateral damage, right? If home prices do come down, interest rates need to stay high for a little bit. That's fine by him, and in a nice way, he was saying it. But wow, that kind of threw me apart, threw me back a little bit. I didn't expect to hear something like that. Anyways, also you got retail sales numbers. They barely got any attention today. Retail sales numbers falling. Here's your heads up for the next earnings season as it comes up here. Retail sales falls by 1/3%. If you're looking around, auto parts and auto dealers down 3.5%. That's a big drop month over month. Electronics and appliances minus 1.3. So think about that when Best Buy goes to report earnings. You start seeing things like that and you wonder why, earnings aren't as great as you thought, huh? Online sales down 1%. Furniture sales down 1%. And health and personal care down about 1/4%. Gas stations up 4%. Well, I wonder why that is. Food and beverage sales up 1.23%. Well, I wonder why that is, right? Bars and restaurants still hanging in there, seeing retail sales growth. Sporting goods also up 0.5%, and building materials up 1/4%. I don't usually spend a lot of time on retail sales, and it just didn't get a lot of attention today, naturally, because of, well, the old interest rates. The S&P, so you get a little bit of a rally here. It is very normal for the stock market to rally on interest rate hikes, intraday anyways. And so if you're looking around, growth stocks were the big leaders today. Large cap growth stocks, that's where all the action was if you're taking a look. I will go over to Microsoft. Let's do it like this. So if we go to the S&P 500, and let's start it with it this way, do a little bit different. So you got Microsoft for everything that the S&P gained today. So if you look off to the corner of your page there, you got the S&P adding, 50 points or so. Microsoft accounts for 5 points, almost 6 points of that. Amazon accounts for 6 points of the S&P today. Apple accounts for 5 points of the S&P today. Tesla, 4 points. You get what I'm showing here? Just a handful of stocks responsible for a big portion of the gains there. Alphabet, also 3 points, if I didn't already just say that. Really 4 if you take both classes of stock there. Meta comes in 8th place there with about 1.5 points, and NVIDIA 2 points, right? So that's where all the excitement was here today. The weakness in the S&P barely had any pull on the overall market. Energy, or Chevron in this case, only 1 point was taken away from the S&P based on the decline of 2 percentage points in the Chevron today. So think about this for a second. If you're an investor and you're going, I need a green light. I need something to tell me it's okay to drop a few dollars into this discounted market. It's gas prices. All eyes are focused on gas prices and, of course, inflation, but we're not going to get that data for a little bit. So if gas prices start to pull back and inflation, naturally we presume, goes with it, that's what puts in the temporary floor in the market for the moment. You get that part, right? If we're all looking here and saying, chaos, that's nasty, as soon as it doesn't look so bad, now I can invest, right? So that's what's going to drive it. If you're looking for something that's going to do that, hopefully we do get a break in oil prices and gas prices in general, and that's going to help the stock market start to put in the floor there. You've got the price of oil actually falling 2.6% today. It's not really, it's early, and it's not really enough to get you to say, okay, that's great. The prices are coming down. But again, any peak in this or any attempt to rally that then fails is actually going to be exciting for oil stocks or the stock market. Energy also pulling back here. You've got natural gas pulling back, which is a big drag on the energy sector here at the moment. And that's pretty much it inside of the S&P. If we look at the NASDAQ, nearly a 3% gain on the day, 300 points on the NASDAQ, right? If you look inside of the NASDAQ, what's it going to be? It's going to be the large cap growth stocks, right? Which is fine. That's where everybody goes. It's the name brands, what you know. Amazon accounts for 36 points of the NASDAQ today. So 1/10 of all gains came from Amazon. Another 1/10 comes from Microsoft. Another 1/10 comes from Apple. And almost another 1/10 comes from Tesla. So those big names are the ones actually driving the mood forward there. So That's no surprise. We don't have to spend a lot of time on that. Gold, you got gold up 1.2% on the day. Strong today, thanks to the Fed doing their tightening thing there. Gold is historically positive during quantitative tightening, right? So in the last cycle of quantitative tightening by the Fed, 2017 to 19 there, gold gained 12%. So it hasn't started yet this time, right? It's still down since quantitative tightening started with the mortgage-backed securities there, but I don't know. Let's see if it's something that maybe gets a little bit of a rally, because I know a lot of people are saying, you got to have your gold, right? The world's coming to an end. Just very common. A lot of people do that. But so far, it's not paying off. So that's unfortunate. Bonds got a little bit of a recovery there. Interest rates falling and a very extended bond market at the moment. So it's nice to see a little bit of a bounce, whether you're looking at long-term or short-term. That's where you currently stand. Sector-wise, well, let's look around at everything. So silver was the best performer out of everything here today. You got consumer discretionary, which would be your large cap growth stocks in there as well, helping lift the way. REITs getting a little bit of a bounce because now we've got that interest rate decision behind us there. And communication services, which is a lot of tech as well, the leading sectors on the day. Weakest sector was energy, and then materials comes in second to last place. It is also the most extended of all sectors if you're looking around there. New highs and lows, I would like to point out, Cody, did you take a little creative discretion with the new highs? And I noticed the numbers aren't there anymore.
Well, that was from last week when we thought, the show wasn't going to make it. So we just kind of threw it together.
You just threw it. So that's the way it's. So no more numbers.
I mean, we could have numbers, but there's a lot of numbers. So when there's a lot of numbers, it's a lot of work. So
all right. Checking. All right. But anyways, we got 48 new highs today. I noticed that yesterday. I'm like, I'm used to seeing something there. But I'm 40 now, so it took me a second to figure out what in the world's going on. Procter & Gamble, anything on the new highs and new lows list, you're looking for extension. I've been saying this for 4 days now. Feels like forever. Procter & Gamble, very extended in the short term. It does not like to be extended. Illinois Tool Works, also very extended after a recent breakdown there. Selling the devil out of some Rain-X, by the way. They own Rain-X, but I was looking into that earlier. Micron Technologies, also new lows today, but very extended. So you're not looking to play directionally. You'd be thinking counter trend here if you're looking for something to pick on. Equity real estate. These guys are like apartments and residential, but they focus on major areas, San Francisco, Denver, Chicago, things like that. Anyways, that hit new lows and very, very extended. You got the interest rate decision behind you. And I also noticed Essex, these guys they do apartments and stuff, but over in the West Coast. Very, very extended in the short term here. You got your dip buyers on alert, right? So everybody looking at that one. All right, stocks in the news here today. Let's see what I can give you. Then I'll take your questions. All right, first up, you got Hertz. Up 5% on the day. Hertz is going to buy back $2 billion worth of stock there. That's a lot considering what they just went through. And that's about 20% of their entire value, right? About 20% of their entire market cap there. So that's a big deal for them. And the stock price liked it. Raytheon, this is not like market moving news there, but the Navy and Defense Department got $5 billion in total contracts from the government there. It was known already, but officially announced today. Oh, boy. Learn how to type, bud. There you go. You got Moderna in the news as well with the vaccine. The FDA said it's cool for 2-dose vaccines for the kids 6 to 17 or something like that. And I don't know anything about this stuff, but everyone that I know that's been vaccinated, multi-vaccinated, boost vaccinated, all the extra stuff, still got the virus. There's like in Florida right now, if we could report what? No, I'm spitting facts here, right? So, dude, Angie got it. Angie's mom got it. They're all nurses. They have to be all done. I mean, I'm just saying. I don't know how it works.
Feels like you're trying to get people fired up.
No, I wouldn't do that. It's okay. I'm just saying. I mean, I got it, but I told people I didn't have it. All right. Yes. Cody's got the eye on me like, don't go down that road, bud. Anyways, I don't know. I truthfully don't know much about that. I just follow the stocks here. But that the kids vaccine, that has been in the works there. So it's good news for Moderna if you're invested in them, and you could finally put that behind you that they did get the go ahead. Nucor, also a little bit higher on the day. They had their investor day and said, hey, everything that we told you was going to happen is going to happen. You like to hear that sort of thing, especially because the next earnings season is going to be really difficult from a margin perspective to figure out what in the world are these guys able to do? Can they really soak up these costs, or have they seen the peak in inflation like we're hoping to see? So anyways, a little bit of rambling talk there. And lastly, you got KLA Tencor. They have their investor day tomorrow, so same concept. You'd be looking for them to give highlights on what they've already projected to Wall Street that they'll be able to do. It's not the most exciting thing. Not a lot of these stocks today were very exciting, and that's just because there's not a lot going on other than the obvious, right? So, yeah, that's pretty much it. Yeah, all right, cool. I'll take your questions if you have any, because that was your excitement for today. Getting higher rates. Yep. I like it. Are you into it? I didn't think I mentioned that one today. You like the idea of this? Here's what I'd be looking at. So you've got this cool little downtrend here. I'll just sloppily draw it on the chart. You're looking for that to break, right? Everybody's looking for that to break. It's like the Chinese stocks, right? Alibaba and the like, looking for it to break to give you the first indication that maybe this is a go-ahead. The higher low helps, right? Now, if it breaks out from here, you got even more confidence. The technical traders will be looking for that. Yep. You're starting a new position in the Qs. Can't blame you for doing that. Anything NASDAQ related, right? Got a severe discount. If you like the S&P at 20%, you got to love the NASDAQ at 30%. So I don't blame you at all for that. Yep. The old transgender thing, I haven't followed much of that. I hear about it, but I feel like the most blessed that I can be since I got rid of cable. You know what I mean? It's just all a bunch of drama. I feel like every day I wake up optimistic, you know. You hear both sides of a story and you're like, I wish you guys luck, you know. Instead, it was like, depending on what channel you'd watch, you'd be like, well, that's outrageous. I don't even watch, man. I watch the puppies on Roku. That's what I watch. Speaking of Roku, what do you think is a reasonable price offer if you see a buyout? Ooh, that's not my wheelhouse, man. That's a good question. It's not my wheelhouse, and I don't think you would see them. It'd have to be hostile because I don't think you'd see them entertain anything at this price. I don't know. Definitely be over $100 though. Roku is there's a lot there. A lot of people go like, I don't know why people like Roku or why someone would be interested in buying it. Those eyeballs, they've got the eyeballs, man. It's hard to get eyeballs today. You got to go buy them. You know? Okay, how about Lucid as an alternative to Tesla? Meaning like you want to just invest in Lucid? I find that one to be really difficult. You have the history now of Tesla fighting through that path to profitability, and you want to like guess that these guys are going to be able to do it too? That's a tough one. Not to mention they keep taking on more debt, don't they? I believe this is the one. They keep taking on more debt. Yeah. Here's so this is even today. I wasn't even thinking of today. They took on another $1 billion in credit debt. That's in addition to like the 400 million or something I saw before. So I think it's a long shot. It's a tough one. I would not do it. No. If you had to if you were saying what should I do one way or the other, I think you got to go with Tesla. That's not a bet I would want to make. Jim says I'm calling the bottom today. Market down. All right. I like it. I like that there. One thing that can help you get those gas prices even just pausing. I would think that'd be enough for people to go, here we go. Because think about what everybody's doing. Everybody wants to know where the bottom's at. I get it. But you need something. And the first thing that's going to present itself is going to be gas prices because inflation, I would think it'd be come out before the inflation numbers. But we'll see. That's what's going to get everybody motivated again. Yeah. Do you think we will pull back to 3,300? It was right before pre-pandemic highs. Um, I I don't think so. No, I obviously have no way of knowing, but I just do not think so. We would be more extended than the market has ever been extended, right? Now, if it takes the rest of the year to do that and it's just a really poor year, all right, then that's fine. But we can't go there from here. There's no way I would bet on it going from here. Yep. Cable. What's that cable all about? I haven't had cable in, it's got to be 3 years now. I mean, I feel like I look younger. The world has room for more than one electric vehicle company. Yeah, there are currently over 500 of them. So, yeah, absolutely. And that's not including the efforts that GM and Ford have recently started making. Toyota as well. But you go over to China, there's over 500 of them. Some good ones, too, by the way. You're looking at KMB under 120. You think it's possible. So you want it down there. You're saying, give me some more weakness. It is 100% possible to get it under 120 because that would be well within an average one-day move. So, yeah, it's definitely there or definitely possible. Yep. Paul says rising rates, low PE. Should you look at banks? I would. Yeah, I can't say yeah, I think you should buy the banks, but how do you not want to buy some of the banks? Right? It's so cheap here. You think of their, oops, there you go. Yeah, short answer is yeah, absolutely. Think you see that. Kirk, not a fan. You don't like Jerome Powell either? I kind of like Jerome Powell. It's just as far as the right guy to deliver the Fed's message. I don't know much else about him, but he does a good job delivering a message. Very even-keeled, calming and such. That's true. I watched a documentary on the electric vehicles of the past. Very interesting. And other ones as well. Hey, when do you think we'll see today's interest rate change in our savings accounts? That's not the same thing. So that is not the Fed's rate is not the rate that you'll see in your savings account, meaning you won't get a higher rate right away. They can if they want to, but that's not directly tied to that. You saw the prime rates go up right away. Ooh, somebody came out right away. I want to say it was Truist. Truist was the first, seconds after the Fed came out. They were like, prime rate's going from 4 to 4.75. So they did not mess around on that one. But no, that's not the same thing. The Fed press sick. Yeah, I mean, you know what I mean? If you had to pick a guy to deliver a very stressful message, I just think he does a pretty good job. Didn't care much for Janet Yellen. Well, I see where a lot of you guys stand on current politics as it is. Thoughts about Powell saying hikes cannot affect oil and food, but he will hike until these prices come down. Yeah, that's an obvious one. So he's saying that doing this doesn't directly impact the price. So in other words, America, don't expect my actions today to help you right away. That's essentially it. 6.3 and rising on those mortgages. Yep. Oh, yeah. Your high yield savings account APY has gone up 2 times in the past 2 months. Why is that? So banks can raise, and they're getting a little more competitive, but banks will raise the amount that they'll pay on your savings based on loan demand that they have, right? So if they're still able to loan money out at 6.3% for mortgages or 5% for cars or whatever, they'll pay you more on their savings or your savings than just 0.1%. But if there's no demand there, there's no incentive for them to pay you more on savings. That's how that rate is basically determined on a bank-to-bank level. Yep. But that's good, right? It shows they're getting more competitive. Someone like an Ally Bank or a Capital One would be faster to raise their interest rates on their savings because they're on a revolving loan cycle, basically. More helpful. And Ally has more products and lending products anyways. Yeah. What are the stats of home prices tanking during recessions? I heard they mostly remain flat. According to Dave Ramsey, they're not going down at all. I highly disagree with that, but yeah, he said they're not going down at all. So the stats wouldn't matter on that one. But is that something we could do though? Yes. So that's something that we do have the data for, and could say, let's look at home prices pre and post recession as well as during recessions is certainly something you could look at. Oh man. Yeah. All right. Well, I will wrap it up there and call it a day. Remember, tomorrow we'll do the Wine and Wealth. Be public for you guys. Come hang out, show you how we teach clients and everything, and have a couple cool little tips and tricks and things that normally we wouldn't do publicly. So you're welcome to come hang out with us. You'll see it pop up on YouTube. And then bring a drink. Come hang out with me a little bit. Let's see what we can do. Enjoy the rest of your day. And yeah, we'll see you later.